The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Plenty of stuff happening, of course, in the world with between Ukraine and Russia, and that's affecting the crypto markets a little bit. So joining us now to discuss the crypto markets is Lennix. He's the Director of Financial Markets at OKX, not OKEX anymore. Hi. I guess you guys have dropped the E. Welcome, Lennix.
Hi. Thank you so much for having me.
Yeah, thank you. So first off, what's your take on what's happening in the markets right now? We just heard from the deputy minister in Ukraine. It seems like the tensions might not be as severe as it's being portrayed, yet the markets are down. What do you think is happening with the crypto markets?
Yeah, obviously the recent crypto market is highly correlated with the Russians and Ukraine tensions. So we can see the crypto market immediately reacts, and not just crypto market actually, it's also on the equity markets and the commodities markets. But we can quite obviously, crypto markets has been stabilized a lot. Given that the tension, we can see a very positive position data, open interest data, and everything's related to this on OKX data that is showing that retail and also institutional side getting a lot more confidence on trade and crypto again.
What can you say about Asia trading patterns amid these thin volumes we're seeing? Do you have perhaps your own explanation or perspective on why we're seeing thin volumes, first of all, and what kind of trading activity we're seeing in Asia?
In Asia, we can see that on mostly after the market crash back in 7 months ago, I think the market tends to be a little bit more quiet. We see that people are actually deleveraging a lot. We don't see a lot of highly leveraged instruments and position that are building up and accumulate highly leveraged position on our platform. People tend to be a lot more cautious, and they tend to be a lot more cautious on holding a simple spot portfolio. And also we see a very tremendous demand on our passive yield product. They're looking for passive and stable return for their crypto. So you can see the market sentiments, especially in the Asian retail segment, is getting a lot more cautious even today.
Lennix, while we're talking about Asia, do you have any idea what's going on in mainland China in terms of crypto trading? Because that was sort of a black box before, and now, obviously there's been this very public crackdown, but I'm pretty confident that there's still trade happening in mainland China. Do you have any sense of what the volume is, what the impact is on the overall crypto economy?
In China, I think after the crackdown on many crypto business in China, I think the trading volume or the market participants is very quiet already, and I don't think that the crypto participant, especially in mainland China, has already been dominated in terms of crypto volume and the participant already. And I think people are getting a lot more difficult to actually converting their fiat currency back to crypto right now. So I don't think that they even mainland China itself, they didn't process a substantial influence to crypto volume and impact and market impact.
You mentioned before a search for yield, and that people are staking their crypto, trying to get returns off of it. Do you think how is the hike in interest rates or that are expected later on this year? How is that affecting what kind of assets people are holding and willing to stake? Is there more of a demand for yield than ever before, just because we're seeing this rise in interest rates?
Yeah, I don't think so. I don't think it's actually correlated on the height of the interest rate. So normally the yield in crypto is generally higher than traditional markets because the yield in crypto is relatively difficult to access and understand, and there's a lot fewer players to if you compare with traditional markets. But people are looking for yield and looking for stable yield in crypto because for several reasons. The first reason would be people are a lot more cautious. They're very hesitant to add leverage. Secondly, they're actually very very interested in participate DeFi. And there are a lot more platform that build easy tools like OKX to become the bridge for people to create their own cryptocurrency wallets and participate all kind of DeFi protocol indirectly. So the UX and the experience a lot better than before. That's why people are easier to looking for passive yield in crypto.
So now OKX, of course, dipping its feet into the NFT market. And NFTs are kind of all the hype of crypto, but without the underlying technology. So what would signal a stable market in NFTs? Is that even possible?
So NFT, I think, is actually a very, very interesting idea, and it's become a buzzword in crypto for the past year. And we see a lot of project created, and a lot of project creators in NFT, in the trading volume related to NFT actually skyrocketing. And OKX also very, very aggressive in building our very own NFT platform. But right now, I would like to say that because there's too many NFT market and too many NFT projects right now, it's relatively difficult for general public to actually access the true value and the values of those kind of NFT. So it's rather difficult I would say if you want to trade, do you need to be aware of the risk of different kind of NFT projects.